Hello, this is Joe Hawranek. I'm the owner of RavenGeopoliticalNews.com. Raven Geopol News is my website. I publish under Raven Publishing, and I have a number of articles plus books published under that. I am. Let me give you a little bit of background as to who am I. The I'm retired, and as I said, after retirement, I have a PhD in economics from the Wharton School, and I spent 40 years in tech, mostly with IBM. I'm a certified IBM communications network consultant, which means I'm an expert in communications, security, and backup. Decided to have a weekly commentary added to my website and put it out on Facebook in order to talk to more people. I decided, since I have a background in finance, I noticed gold has been bouncing around, and I'm saying, what's going on? And I looked into it. Gold traded $1,300 an ounce in April and has gone sideways for the last 3 months. And gold is in a 5% range around 1335. I believe gold could hit as high as $10,000 an ounce based on Jim Rickard's analysis of national debt, which he takes and divides by the total number of ounces in U.S. possession. And then he says it's if we back the dollar by 40%, the answer would be $10,000 per ounce. And I think that's a reasonable theory. Okay, I don't know what else to call it, but we're going to have to see time as it works out with respect to um, the marketplace. First off, I want to look at both negative forces on gold and positive forces, and then discuss where that may actually head. The negative forces on gold is that basically we have a slow U.S. economy, and there's a persistence for disinflation. Things are getting cheaper because people are dumping merchandise on the market. The Fed is increasing the interest rate. They have a policy now to increase the interest rate. They need 4%. And the reason why they need 4% is because when the market crashes, and that's what they expect, they want to be able to drop the interest rate by 2% and come out of it saying, hey, we're the ones that created it, that made it happen to come back. And they need airspace of about 4%, not 2%. Okay, so they're going to continue increasing the rates. In addition, Fed got stuck with about $4 trillion in bonds, most of which is bad debt, when they did when they started buying back all of the Federal Reserve Bank's bad debt on their books and putting it on taking it from the Federal Reserve Bank's balance sheets and putting it on the Fed's balance sheets. And all the Fed had to do was create money in order to do that. So they put about $3 to $4 trillion in money in dollars on the books, plus they put all that debt that they bought on the Fed's books. So they have to get rid of it now. The positive gold forces are the headline risk reduction. When there's geopolitical events all over the earth, Syria, South China Sea, North Korea. When people see these things and they're worried about war, they tend to head to secure investments, and the most secure investment is physical gold that you can handle in your hands. It doesn't disappear, and it's always good. There's good demand and supply for gold today, and right today we also have two forces in opposition. Let's look at this chart closely. As I said, gold has been moving sideways for about 3 or 4 months, but if you notice at the bottom curve, so has the dollar. The dollar and the gold are inverse. When the dollar goes down, gold goes up, and vice versa. Okay, that's just the way it works. I'd say that something has to give. Trump What Trump wants, which is a nationalist state, is devalue the dollar to help manufacturing within this country, make America first. China wants their gold worth more, but they have been buying gold to back their renminbi for at least 5 years now, and they buy everything they can get their hands on. The dollar price of gold is the inverse of gold, as the previous chart showed, of the gold price. And if the dollar is weak, the gold will rise. So the question is, are the dollar going to go down or is it going to go up? In the face of that, we have the Fed policies and trade wars, which we just discussed, as negative factors on the gold. And the Trump tariff, although it hurts China manufacturing, but helps their gold reserves. The press doesn't report the full amount of tariffs. The United States has virtually no tariffs, and China, on the other hand, tariffs everything. Their average tariff is about 16.5%. Their tariff on cars is something like 50%. So Trump's tariff increase in this country, it doesn't even level the playing field. If he really wanted to level the playing field, he'd say, I'm going to pick up with the tariff that China uses today, and this is all announced in the World Trade Organization, because I picked up the chart, and it's literally thousands of items, and I'll match that. Everything they have a tariff on, I'm on a tariff too, okay? But that doesn't get his point. He wants to pick a few industries and get them successful. Quantitative tightening of the Fed balance sheet. That means that they're buying back or they're getting rid of the debts on their balance sheets, and they're trying to sell it to the public, and the public being other banks as well as pension funds and stuff like this. And in return, they'll get cash out of the economy, and they will get that bad debt off their books. Qualitative tightening plus rate hikes, it's going to cause a weak dollar. It's definitely negative for Trump. And there's some debate in my mind whether this is a political move on the part of the Fed, or they've got themselves painted into a corner. They have no other alternative. It's a little bit of both. It's speculative a little bit, but I think we need to think about where's gold heading, up or down. First off, we have to recognize that the economy is going to be slow growth for a few months, and eventually a pause by the Fed in their rate hikes, when they say, okay, if I put them up much more, then I'm gonna kill the economy. And I don't want to, it's not that they care about that, because I don't think they do. I think what they just don't want to be labeled as the ones that caused the crash. Okay. Meanwhile, the White House has been jawboning for the weak dollar, and I think the combination will cause the dollar to fall. And when the dollar falls, gold will rise. Savvy investors can see this coming and jump on gold and gold stocks now. I'm not going to point out which ones, but you can figure that out. Till next week, I just wanted to say that why don't you check out our site, ravengeopolnews.com. There's 200 articles out there, 100 are free, and they go from everywhere from Hillary Clinton, Benghazi, China, economic ideas. In addition, we have 7 books, 2 of which are on Amazon. You can buy them from Amazon, and 5 are downloadable digital books on this site. So I look forward to seeing you again, and that's it for now.